Good morning, everyone. This is Financial Literacy 101. And today we're basically going to have a conversation about rising and grinding because this is the time to do it, okay? So one of my favorite books that I've read is kind of a book. I don't know if you guys ever heard of this old school book called My Book of Bible Stories. It came in like the same color text or the same color that's the background of this video. And I used to love that book. So this is kind of like my book of tall tale stories, meaning they're not false, but this book is absolutely awesome. Okay. It's a great book about how get up, rising and grinding. Because right now there's a lot of Americans, there's a lot of people out of jobs, but they're trying to scramble, they're trying to figure out things to do. And the one thing I project, or one thing that I think of you should do is learn. Learn something that could be more profitable for you when things get back to normal. And the way they're talking about now, things are not going to get back to normal until like late next year. Okay. So they came out with a prediction of if things don't change by September of this year, it's going to be another 100,000 Americans dead from the coronavirus. So as we probably start to stiffen and strengthen and restrict more movement across the United States, we need to actually get into learning about money. Okay, learn about money. As I always say, you want to read books. But let me just read something from this, and I'm going to show you the stock market here. So please stay with me. On the back of this book right here, it says, truth is, there is one common trait I notice in all the people I meet who are thriving and striving. Every single one of them has got a killer work ethic, okay? A killer work ethic. They are up and at it each and every day. And I think, and they are at it hard. You can call it drive, you can call it oomph, grit, or hustle. I call it rising and grinding. And that's what you need to do, ladies and gentlemen. Let me show you the stock market, because the stock market is not doing so well right now, according to the bigger pot of stocks. So let me just change my screen. Give me 1 second here. I didn't mess some things up. All right. Here we go. So right now, we're looking at the stock market, and as you can tell, all the major markets are down. All the major markets are down, except there's one stock in particular that's doing well, because you got to think about this. I was telling my buddy, the key to investing is not only the analytics, it's not only looking at the metadata, not only reading the gap, not only reading the RSIs, that's your relative strength index, or your MACDs, or your movement averages, or your divergence or your convergence, all these analytics that people watch to predict stocks. There's one thing that you need to understand. You need to have common sense, and you need to understand, if they start to restrict more movement across America, what's going to go up? Like myself, I love DoorDash. DoorDash is actually going public, okay? But and I would, as we move forward, there are going to be a lot more people working from home. There's going to be a lot more people ordering food. So here are some of the top names in the food industry. One is Grubhub. That's the one I'm looking at right now. Grubhub is actually up 6%. Okay, it was up 7%. It took a slight dive. Let's look into the data here. So 52-week range. And so in 52-week range, it was at $29 all the way up to $80. Now it's still on a rise, okay? Because Grubhub merged with a European company. A lot of times that could see, because as you can tell right here, we always go to the information, EPS, earnings per share. So they are operating out of debt, but a lot of companies operate out of debt and not do so well. But when you join and you combine companies, a lot of times that actually helps companies, because they're going to use their revenue to booster their business. But what's important here is, as we look at the stock market, okay, as we look at the stock market, we're looking at all the major markets down, okay, all the major markets down. But let's look at, say, top gainers, okay? There's not that many. There's not that many top gainers. It really isn't, okay? But I remember telling a lot of my subscribers that a lot of safe investing, and again, there's risk in any investment that you actually make, but in my opinion, the safest investment are your ETFs. Okay, when it comes to hot ETFs, you got the Dow Jones, S&P, NASDAQ, Russell 200. These are actually doing well other than the NASDAQ, okay? So the one I love the most is probably the S&P, okay? Probably the S&P. But these are the top ones that are doing pretty good. And look at the market with ETFs. Again, if you're not a day trader, if you can't wait to make money, because people are like, man, where did I put my money at? You tell me about always making all this money. That's because I was day trading for a moment last week. I was trying to get back into it. I'm still getting back into it. And I'm still doing research, even though I know how to read gaps, how to read analytics. I'll show you this really quickly. I'm reading this story right here, how to play the gaps, right? Because there's four common terms or four groups of gaps: breakaway gaps, exhaust gaps, common gaps, and continuation gaps. But basically, that's your RSIs. That's all that is, how to read that particular information. So again, we're back here on the ETFs, and these are the ETFs that are listed on the S&P 500. Look at all these stocks. Now, these top parts are actually doing pretty well. Okay, your pro shares is doing really good today. The direction daily, that's doing really well today. So we got things, let's go by percentages. A lot of times percentages, let's see here. Right here, we have 11% change. So in my opinion, if you're in the green, you're doing well because you're making money. Okay, you're making money. But again, ETFs, they're similar to index stocks. You can trade them like regular stocks, but they're a little safer, and they do come with expense ratio, especially index stocks. But now, when I look at ETFs, I look at ETFs for long-term investing. See, the thing about today about getting up, rising, and grinding is I get on my computer and I'm learning something new every day. I'm researching something new every day. So when people say, "Oh, I lost my job, I'm down, I'm this," hey, if your internet is still on, or if your library is still on, I know they're closing a bunch of Starbucks. So if you got your money in Starbucks, they're closing 400 Starbucks. I'm just gonna give you some information here, because the information, okay, I get up and I look at TD Ameritrade, Trade TV. I look at CNBC. I look at Yahoo Financial News. I look at a lot of financial news, because soon as stories come out, it almost instantaneously or right before hits the market and changes stock prices. So that is what you need to understand. Stock news is very, very important. All right, let's move right along. So we're up here rising and grinding, okay? And we're talking about finances. Now, I talked to my son yesterday for about 30 minutes. He's actually getting to Forex, okay? Basically investing in the US dollar currency, converting back and forth from all different types of countries. We're talking about, we have Europe, we have Great Britain, we have Japan, Canada, France, Australia, New Zealand. So he's getting into that. Now, he knows a lot more about Forex trading than I do, because I try to stay in certain sectors, and that's where he's going. And there's a lot of money in Forex trading. I called him this morning. The boy was still asleep, talking about he an investor. But anyway, Forex goes on all day, just kind of like cryptocurrencies. Now, what I love about, and the platform that I'm actually using right now, as you can tell, is Webull. If you guys want to invest in Webull, I have the link in the description of this video, so go check that out. But what I love about Webull is that they have these hot industries, and as you can see, things are popping up and moving and showing you how things are actually rising. You got Wayfair, Etsy, Amazon. So even though that the market, because of the large platforms, the Dow Jones, let me go back up here so I can show you guys. Okay, you have the Dow Jones Industrial Average. You have all the big markets kind of tanking. Okay, look, Dow Jones is down 3.8%. SPY is down 2.64%. So there's a lot of markets that are down. You have a lot of decliners, right? Then you have your top losers here. This is crazy. So when you look at these particular things, people become worried in the market, but there's still money to be made. Now let's look at this stock over here that's going crazy, called Wayfair. Now, look at this. This stock is up, and look how it is just booming up from this morning. Look at this. This is crazy. Now, what if you would invest into this when it first opened up? Let's see, when it first opened up, it was around $10. Okay, and let's say you dropped 1,000. It's already up 13,000. It's still teetering. Okay, it's still teetering. So this is the type of information that you guys need to know. And I'm going to look at the trade portion here. I can show you. Of course, it's going to turn black. That's why I put mine at. But anyway, what I love about this is, and this is what they call gaps. This is what you call the analytics of a stock, okay? And when we read about this, I'm just going to make my whole screen this so you guys can see. Some of this may look like jargon to you guys if people don't invest. But there's a pattern and there's a trend. Again, this is about rising and grinding and learning about financial information, okay? Because that's what this is about. The people he has on the back of this book, okay, I forgot this guy's name. I always messed up, but Gary Vaynerchuk, that's a big investing tycoon, as you guys know. But anyway, let's get back into this. And we see that the patterns, as a lot of these, a lot of this information is here, we have to look at how they position themselves, right? How to position themselves. And all these lines mean something. So you see this blue line that's being highlighted every time I hit it? That is called the MACD line, okay? And that's the movement average. So there's a lot of information in stocks that can kind of show you that helps you to predict that if I'm not going to invest at the very bottom, and I'm gonna give you a good point right here. So what if I was to invest down at the down trough right here? You see all the red. I know it's pretty small, so excuse me for the view. If you invest at the bottom right here, because there's a point where there's a bottom, there's a cap. But then what happens is almost 3 to 4 ticks. I like to call these tickers, okay? I know that sometimes the stock code is called a ticker, but I like to call it, there's a professional name for this, and I totally forgot. People call them candlesticks. Let's just go with candlesticks. But anyway, when the candlesticks drop like this, if that stock doesn't tank out, which if you have a stock that's usually over $10, they're not going to tank out. They may lower, but it almost goes up. So I count 3 to 4 candlesticks, and then I go up, and you would have made some money right around here. So I'm sorry that that's very small. Yeah, that's very small. Sorry about that. But that's just giving you a little quick insight about how I read things, okay? So even if I look, let's look at, say, Grubhub. So we're going to look at Grubhub really quickly. Look at Grubhub. Let me move this out the way. Look at Grubhub. I'm going to stretch this one out for you guys. Where is it? As you can tell, Grubhub, I know this is pretty small. Let me stretch this out. There we go. Now, think about this. If you want to invest in Grubhub, down where it says 55.09, I don't know if you can see that's pretty small, but if you want to invest in Grubhub then, and look how it spiked this morning. And it spiked this morning because new information came out on the news about how 21 states have spiked in coronaviruses. So remember me telling you guys that when tragedies happen, when there's national disasters, people make money because it dictates, it influenced the markets, the way people react. So if more people are staying in, you got now, Grubhub is the only one I know that has a stock, but let's look at all the other companies that deliver food. I mean, other than Uber Eats, but Uber Eats don't come to your door. Who wants to deal with Uber Eats? And the regular Uber is down 5 to 6 points this morning. But anyway, you have Uber Eats, DoorDash, Grubhub, Postmates, and there's another one I forgot. But there's plenty of people who deliver food, but the majority of the ones that people know are your Uber Eats, your Grubhub, your Postmates, and your DoorDash. DoorDash is my particular favorite, and DoorDash is actually coming out with a stock. So when I look at the market, and I look at all these things, ladies and gentlemen, these things are imperative because you have to understand how things move. You have to understand how things move around. And I don't just look at Webull. Okay, again, that link is in the description if you guys want to invest in Webull. And I tell you, if you got $100 that you just hanging on to, go ahead, throw your $100 in Webull, do some research, and actually invest your money. And listen, you don't want the volatility of stocks. If you don't want to look at the market all day and like, I don't want to look at this. If you are investing for the long term, that's why I'm showing you one of the most important sections here. It is the hot ETFs. It is the hot ETFs. And right now the S&P is the market that is doing the most. And you go in here with your $100, and guess what, ladies and gentlemen? You have stocks, you have shares in here that are $20 and below. Look at this. You have one for $16, $10, $12, $7, $19.20. So a lot of these are under $20 where you can buy 5 or 6 stocks and just hold on to them. Hold on to them. Let me give you an example. I think this would do this. This would probably put this into perspective. Let's do the 5-year margin. Let's say if you would invest into the stock way back here, okay? Way back here. Now this is May 2016, and this stock was up $166. Isn't that crazy? Isn't that crazy? And look the way it dropped, because it steadily dropped. But let's show you a stock that has better growth margins throughout the course of time. And if I can remember, I believe this is one right here. Let me know. I don't want to put my foot in my mouth. I'm live. You know, you put your foot in your mouth. Yeah, that's red too. Look at that. All over the place. Like a down. So you pay for it the highest mark, and then it dropped slowly. Then you got the RSIs right here. But even in a decline of a particular share, let's say, for instance, you would have bought it here and you would have did your information. We got all this metadata that I'm referring to. You would have educated yourself on this, and you would have sold it right at the top of the stock, $93. And through these dips, I call it the mountaintop, right? Either the mountain is going up or either the mountain is going down. Either way, right here, if you would have bought this stock around, let's see here, $35.66, and you would have bought, like, say, 100, and then you sold it at $42, you still made money. So there's a lot of money to be made, whether you're buying or investing and staying in stocks. Now, let's find one, because ETFs usually do fairly well. So, okay, let's do a Vanguard one. Vanguard is one of my favorites. So let's take this one right here. Now, this one, before I even show you, I'm not going to play you on this one. It should be going up, okay? It should be going up. Let's see here. There we go. Okay, so the main ETFs that I invest in, they're either with Vanguard, Fidelity, or Charles Schwab. All the other ones, I don't really deal with those that much. And here's another one that has great dividends and great profit margin. Investco Trust is listed on the NASDAQ. They're probably down right now. Okay, cool. But look at this. This is the one I absolutely love. Yes, this is one that I absolutely love. You got your dividend history here, but they do fairly well. But this is the one I like. And look at the year-to-date yield for dividends, 16% on dividends. Now, I know you're saying per share is $243, but look at this, ladies and gentlemen. So here's a 5-year total. So if you were to invest into the stock, and I'm just showing you the power of investing. Again, this is about rising and grinding and learning. Okay, and learning. I was reading a story in this book today. About this lady who was a former Air Force pilot who was go hiking with her dog, and her dog didn't like to eat in the morning. I guess he was intermittent fasting. But she was up on a mountain and the dog was hungry. She there's power bars and Cliff bars for human beings. So she has came out with it's called Turbo Dog or Turbo Bar or something, but it's for dogs, for a power bar. And that was a really good idea, and that made a lot of money because the pet industry is a $60 billion industry. And a lot of you have great ideas. Like if you want to get into clothes designing or dog designing or whatever the case may be, go buy a little cheap sewing machine. So there's many ideas. I want you to look around your place right now, your house, your home, wherever it may be. There's ideas like this. I'm sitting on a chair. Someone made this chair. Someone made the cushion on the chair. Someone made the fabric on the chair. I'm speaking on a computer and a webcam. And I've done this before, ladies and gentlemen, a mouse and a microphone. And I have all these USB drives and all this stuff around me. Someone made these things. They're millionaires and billionaires because you only need one good idea that somebody hasn't thought of yet, and actually take action on it. And that is what this book is about. Outperform, outwork, and out hustle your way to a more successful and rewarding life. I'm up every morning and I'm reading stuff, or I'm on my computer and I'm researching stuff. Rise and grind. Okay, back on this. So we can tell that back in, what year is this? This is 2016. This stock was worth $109. If I were to tell you, hey, in 5 years, this stock is going to be worth a staggering $242, regardless of the recession, regardless of the COVID-19 recession, you're still going to be up more than $100. You're going to gain 100%. Okay, you're going to gain 100% and plus more on your investment. What if I was to tell you that? But I can't tell you that because the power of investing, especially when you are investing in ETFs and index funds, are long term. Because regardless of what happens in the market, ETFs and index funds do primarily well. Okay, do primarily well. And I forgot what newscast Warren Buffett was on. There was another investment on there, but Vanguard CEO before he passed, Jack Bogle, said that's all he at the end of his tenure investing. That's all he did. That's all he did was invest in ETFs and index funds. All right. The expense ratios are low. That means the operating cost is low. And the profit margins, look at this. You buy in 5 years. So however you are, you're 25 years old, you're 30, you're 35 years old, you're saying that, hey, Ross, I have $1,000. If I would have bought this stock, I would have doubled my money. I would have tripled my money. Yes, in 5 years. And you would have still had a job. You've still been working wherever you work at, whether you're a doctor, a lawyer, or a secretary, or you work at the fast food joint. The problem is this, ladies and gentlemen, we see things that we want and we want to go out and buy them and we want the best, even though we're not doing the best, but we want the best, but we don't think about the future. Okay. When I have people to call me, when I have people to email me, they ask me where to put their stocks in. And I'm like, well, are you talking about short term? Well, here's the thing. Are you talking about day trading, short term, or long term? See, me, long term is 5 years or more. Short term is anywhere between a year and 3 years. Okay, that's kind of where my mind is. Now, there's probably an industry standard of what people think long term or short term is, but that is relative to me. So when people ask me these questions, I like to know where they are at in life. Because before you come to me like, I want to get into investing, do you have debt? If you debt other than car debt and house debt, you got those two debts, okay, everybody has that. That's fine. Let's get to investing. And now, granted, while you are paying down your debt, whether it be credit card, medical debt, school debt, can you still invest? Should you still invest? Yes. But you should be investing more safely unless you're just an investment, genius. Like you just understand all the candlesticks, the RSI, all the data, how to read gaps, how to read patterns, etc. Then I say go for it. Okay, go for it. If you are Ross Cameron, if you're a Warren Buffett, you're a Jack Bogle, or you're a Ray DeLalo, if you're a Damon John, whatever you may be, if you're a beast in those regards, then go for it. But if you're an everyday person who does not know a lot about investing, but you know that investing has made people rich or made people profitable, have made people better off in life, then I would tell you to take safer investing, and safer investings really include bonds. I know some people say CDs. I hate CDs because the profit margins are not there for me. They're just too weak. But bonds, where you can get anywhere from 2 to 4% for government bonds, 4 to 10% on corporate bonds, and then anywhere from 10 to 30% if they're junk bonds. Really risky. I don't advise those at all. But you got bonds, index, and ETFs. Those are your safe investment where you put your money in and you just forget about it. You just know that you have an account. And I would tell you to do dollar cost averaging. I would tell you to do monthly allotments to that, where you can put $50, $100. Because here's the thing. A lot of you have $50 to $100 that you can invest every single month. Now, granted, I know during these times, excuse me, during these times, that money may be scarce now. But I'm talking about prior to, and I'm talking about after, because there's a lot of jobs that's now coming online and hiring people solely online, because that's where we are right now, where they're doing video interviews, but they're still doing stay-at-home jobs. Now, if you work inside of an office building or you worked at a fast food joint, some of them still, some of those are still on with some restriction. Okay, the workers have to wear gloves. Well, I hope they're always wearing gloves, and they have to wear face masks. But those jobs are still available. So there's money still out there. That's why you have to get up. That's why you have to get up early and rise and grind. And sometimes I don't want to get up. Like yesterday, I'm not gonna lie to you. I stayed in bed up until around 7. Usually I get up anywhere between 5:30 and 6:30 because I'm getting prepared to look at the market. Whether I trade or not. Like today, I haven't traded because I saw the news. I'm not trading out a darn thing. I saw the news. Now, granted, is that smart if you're an investor? Not necessarily, because there's always money to be made in the market, because guess what? I can do option trading. Option trading where I could have bought $10,000 worth of options last night, knowing that the market was going to tank because of new information that came out. And guess what? Like I said, boom. Let me go back home here. That's not where I want to go. Because again, look at the market. The market is down. So we have to understand that these things all equate to money. I'm gonna read some of your notes. Ash Hawkins says, grand rising. Okay. Mike says exactly like you said, always learn money and be inspired. Thank you, Mike. Thank you. I thought it was a great slogan when I thought of it, but you just confirmed it. Pat says, I love your videos. They're very educational for a person who doesn't know nothing about investing. Dolly Smith says, good morning. Kendra Teller says, the patent industry is overlooked, expected to be over 80 billion in 2 years. And Kendra Teller says, pause. Oh, pause. Oh, pause means money. So here's the thing about investing. If you don't know much about investing, some people like to equate it to betting. Now, some people who are professional gamblers, they have those. They have professional gamblers. They would tell you that they read signs that they patterns. So if I had to say that's probably similar, it's patterns. And me showing you that information of how stocks throughout time keep going up, that's a pattern. So you're investing off of patterns, okay? People who are risky investors are usually day traders because they're looking at patterns that are this small. They're looking at, okay, they bottom out, but they just bought a new company. Like they got all this information, and then because I've done it. I think I told my son last week I made $500 in $500 day trading last week, which is not a lot of money. But if I could repeat that every week, that's $4,000 in a month. I could just probably get better at day trading and do that. Because in one day I have videos out there where a couple of days in 15 minutes I made $400 option trading because that stock just boomed up. How did I know that? I looked at gaps. I looked at the relative strength index. That's your candlesticks. I looked at your movement averages, and I looked at the news. So I bought it last night. I'm like, we'll see, and it blew up. So with gambling, you don't have that same information. Okay, you don't have that same information. You playing Russian roulette. There's not a news story come out. Oh, the new Russian roulette tables have magnetic binders on them. So, I mean, there's no really metrics to gambling other than a pattern. Okay, maybe you're playing poker and you can read people really well. And every time a person has a certain hand, that's an expert poker player. Okay, because he can look at human behavior. Okay, because human behavior have patterns. Because we do, believe it or not, we do certain things when we're going through certain things. Okay, right? Because take for instance a basketball player. He gets up to the free throw line and he's doing the same motion every time. He's practicing that motion every single time. When I free throw, I do this. I do this. I remember like Kevin Durant, when he gets up to the free throw line, he grabs the ball and he does some weird stuff with his shoulders. He does it every single time. It's his pattern. It's the way he works through his shot. Okay. someone like Shaquille O'Neal, you just good luck. I mean, he got a pattern, but it ain't good. You know what I'm saying? He wasn't a good free throw shooter. But Kevin Durant is. John Stockton was a good free throw shooter, and they had that certain pattern. So long-term investing for a person who knows nothing about investing is really, really easy. Okay, it's really, really easy. You like, okay, ETFs and index funds. Which one should I get into? Look up the best ETFs and index funds. Boom. Now, some of them may be out of your reach. Like, no, I don't want to spend $200 on a stock. But what if in 5 years it's up to $400? See, I tell people worry about how much money or how many shares they can buy. Oh, I got 50 shares of that. Where's your profit margin? I just showed you a share that 5 years ago, it was worth $109. Today, it's worth $243. Okay. I remember buying Berkshire and Hathaway. That's Warren Buffett's conglomerate company. I remember buying Berkshire and Hathaway B, not the A stock. I can't afford the A stock. But I bought it at $77. So let's take a little field trip here. I just want to look at Berkshire and Hathaway really quickly. So let's look up BRK.B. Okay, let's see where this is at. $183. I bought it at $77. Okay, let's look at the 5 years. Look at this. Okay, now this is not an ETF index fund. I just banked on that Warren Buffett is a beast. Okay, I banked on Warren Buffett is a beast, and he's an investment giant. So I was banking on the man and the company, not because of the ETFs and index fund. So with that being said, okay, this was now 5 years ago, it was worth $140. Again, I bought it at 77. Now, I don't have any more of the stock left because I'm an exact idiot. I should have kept my money knowing that it was going to climb up. Now, is it too late to get into the stock at $183? No. The only problem with this is, now I'm going to tell you how investment works. And I'm going to tell you how organizations and companies work. Warren Buffett is an elderly man. He's very old. I believe he's in his late 70s, early 80s. He is the owner and CEO of Berkshire Hathaway. The problem with this, if Warren Buffett were to pass away, and since he's older, he's more prone to pass away than a younger person, this stock is going to tank unless they find that his predecessor, that the person who's going to fill his shoes, is just as good or better, okay, or maybe this one tier below than he is, then the stock would drop a little bit, then bounce right back, okay? Because a lot of times people invest in people like, oh, I like Berkshire Hathaway. They got Warren Buffett at the home. He's in charge of the company. But who is he surrounded by? So, board of directors, other investors. If the company looks solid, then the stock usually go down just a little bit and bounce right back. So somebody say, hey, is Berkshire Hathaway a good company? The B stock, is that a good company to actually invest in? I would say yes, but would that mean you would make any money? No, I don't know the future, but I'm looking at the pattern. Okay, I'm looking at the pattern because let's see up here, it got to $230. Let's see, $220. $217. Yeah, so $230. It dropped down to $169 because of COVID probably. Let's switch down here. Yeah, this thing about this, if you would have bought the stock at $169, it's at $183, you still made money. Okay, so is that a good stock? Sure it is. Let me read some of your notes. Ashley Hawkins says, yes, I thought of a growing business. That's a lot of work. You're just gonna be cutting dog hair all day. But I'm not saying it's not going to be good for you. If it's something you love and that you're passionate about and there's good money in it, then I think you should do it. Wayne Peterson says, hey, Ross, what's your thoughts on cruise line stocks? Let me read the rest of these notes because, yeah. Nicole Moody says, hello, Ross. I have an account with Fidelity and Merrill Edge. I was considering consolidating them into one account. I understand Fidelity more than Merrill Edge. What are your thoughts? Yeah, I mean, if you have more money investing into the same stocks and shares, then of course your profit margin is going to be up. Now, when I first started off investing and saving and doing all these things, I had all these accounts. I had Vanguard, Fidelity, Charles Schwab, Robinhood. I had all these. Now I'm consolidating a lot of my investments accounts, because it's not like I have hundreds of thousands of dollars out there. I don't. I really don't. I don't have millions. I don't have $100,000 out there. Have a couple of thousand here, a couple of thousand there. And I'm like, what am I doing? I can invest more into this particular stock or this particular fund or this particular bond if my money is consolidated better. Because at the end of the day, a lot of people would say don't have your eggs all in one basket, but they're not talking about your investment platform. They're talking about the diversification of your stock portfolio. Don't have, you had $5,000. Don't put all your $5,000 in BRK, because BRK, one thing happened to BRKB and all your $5,000 is gone. That is the power. That is the intelligence of diversify your trading. So if one stock goes array, starts to decline in your portfolio, and your other stocks in your portfolio perform well, then you still make money. You're still profitable. Now, cruise lines. I do not know, man. I'm just going to be real with you. With the new information that came out, and that, like I said, I was looking at TD Ameritrade Trader TV this morning, and cruise lines are doing horrible. I wouldn't do it. That's just me. It says Shoe Carnival. Carnival, is this the one? They're doing bad this morning. Is this Carnival Cruise Line? I don't know if this is Carnival Cruise Line or not. If anyone knows Carnival Cruise Line's ticker, I don't know if that's Carnival Cruise Line, but they're doing pretty bad. I know you got Carnival Cruise Line. I know you have Royal Cruise Line. You have Disney Cruise Line. I don't know if Disney Cruise Line fall under Disney, but Disney, hold up, Disney may be doing pretty well because they're talking about opening back up. Okay, they're talking about opening. I'm talking about Walt Disney. You have a Disney of Europe. Okay, no, they're doing horrible too. Let's look at their 5 years though. So yeah, overall Disney is doing well, and they got a really high pair, 147 per share. Now they're down to 116. So it just depends. Me personally, I wouldn't be investing in any Carnival. Now, granted, let me back up a little bit. Even though that the stock market is doing bad, should you invest in stocks that are performing horribly right now? Well, it depends. If you are not in a rush, if you have patience, as Warren Buffett said, the transfer of wealth is from the impatient to the patient. And what that simply means is if you buy low, now we know when COVID-19 goes away, and eventually will go away, either, unfortunately, a lot of us may not be here, but a lot of us will become immune or fight through COVID-19. Money is still to be made. Money still will be going on, okay? Because not everybody's going to die. Not everybody will be losing their jobs. There's money to be made. So let's take, for instance, you buy Disney at 115 and you wait 5 years and Disney goes up to 147. You made a lot of money, especially if you continue to invest inside of Disney. So it really depends on where you are in life. Okay, if you will wait to if you have the patience to wait it out, then I would tell you buy any stock in decline. Thank you for the code for Carnival Cruise. Okay, so Carnival Cruise is down 13%. Okay, because no one's getting on cruise lines right now. But look at this. This is talking about the pattern. Okay, I will look at this stock and I'll go, yeah, there's money to be made in this, but there's a lot of volatility. It looks like, of course, when they first started off and I'm just looking at the 5-year mark, okay? Because right now there's $17. There's $17.88. Look at this though. $48 5 years ago, it was $48.92. Okay, $48.92. Then we get to, this is May 2018. They went up to $69. Okay. And now no one predict COVID-19, but it started to go down, 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 and boom, today, that's April. It went down to $8.49. Now, granted, if some of you would have took that $1,000 that I know you have, and you would have bought $1,000 worth at $8.49, and right now it's at $17.88. Think about that. You may double your money. You may double your money even on a stock that's not performing well. That's what I'm talking about. The power of investing and the power of understanding. So when people say, when I'm looking at all these stocks that are in the red, I'm looking at all these stocks in the green. Most investors are like, hey, I want to buy stocks in the red before they turn green. You get what I'm trying to say? Because you're going to buy a stock, because that's called buy low, sell high. But if you're looking at a stock like this, where one thing can happen, and it can just totally just crush the market. Because even if, okay, take for instance, this 2018 April, stock was worth $71.65. Then we go to 2019, okay, it went down 58, it went from $71 to $58. That, to me, I don't like those margins, because now I'm waiting for the next big thing. Oh, well, Carnival Cruise now has escalators on there. Well, they do got escalators on there. No, but they come up with some sort of innovative technology for ships, which, you know, they will have to do to have their stock price to rise. If you're not an everyday investor, if you're not a day trader, ladies and gentlemen, just go ahead and invest in ETFs, index funds, and bonds. And again, as you see the platform that I'm using, you know that I'm a bit advocate of Robinhood, but I'm not gonna lie to you. I'm getting out of Robinhood because I love the fact that all my information is right here. I love all my information right here in Webull. And again, if you guys want to invest with Webull, the link is in the description below. And guess what? When you deposit $100 into Webull, this is the great thing. When you deposit $100 into Webull, you get 2 free stocks. I didn't say trade with $100. If you simply just put $100 inside the account, they're going to give you 2 free stocks. I don't know what the stocks are. I don't know. But use the link below and out. But anyway, ladies and gentlemen, I just want to give this information today because I knew the market was going to tank. I got myself prepared. And regardless of what the market is doing, whether you buy low and sell high, you get it in a good margin, or you do what I call, you know, the most safest investments are your bonds, ETFs, index funds. There's still money to be made. But regardless, if you're going to start a business, become an inventor, or innovate a new process, at the end of the day, ladies and gentlemen, you have to rise and grind, because there's really for you to have a pity party, because people are still spending money, people are still making money, and there's a way for you to make money. You just have to figure out a hustle. You have to figure out a grind, but it's out there. And if you're not going to do any of those things, at least be the smartest person in your house, on your block, in your community. Get up and read something, get up and do something, get up and look at business news, financial news. That's all I got to say for today, guys. I'm going to read your notes. I'm going to get out of here. Let's see here. Cruise lines will recover over time. That's from Wayne Peterson. And Wayne Peterson also says, but imagine if you buy that stock at $8 and hold for 3 to 5 years, when the recovery happens, people will go cruise lines over planes because of pricing and new guidelines involving boarding on planes. I agree. I totally agree. I'm not saying investing in cruise line is bad. I'm just saying it's kind of like anything else. You have to know when to get in. You have to know when to get out. That's it. And Ashley Hawkins says I would definitely sign up. All right, ladies and gentlemen, that's my time for today. This is Financial Literacy 101. And again, if you want to start investing, the platform that I was looking at today is called Webull. I have the link in the description. If you simply sign up and deposit $100, I didn't say trade. If you deposit $100 of your money, they're going to give you 2 free stock. And look, at the end of the day, you throw your $100 in there, you don't want to trade, you get your 2 free stock. cash out on them, that's probably a Snickers bar and a donut and a cup of coffee. But anyway, this Financial Literacy 101, learn money and be inspired. I'm out.